There is Bitcoin, and then there's everything else. They are not competing with Bitcoin. They're competing amongst themselves for something completely different.
What are like the most common misconceptions that you've heard?
Maybe the S&P 500 is no longer the benchmark. Maybe it's Bitcoin.
Hey everyone, quick thing before we start. Over 50,000 of you keep coming back to watch and listen to this podcast, but over 65% of you still haven't subscribed yet. So here's my simple ask. If you find value in my Bitcoin content and you enjoy what I'm doing, please take a second to hit subscribe on YouTube or follow me on your go-to podcasting app. It's a small action that really helps push my content through the algorithm, and this way we can make sure that more people learn about Bitcoin. Thanks for being part of this journey. Now let's dive into this episode.
All right, Danny Baer, welcome to Bitcoin for Millennials.
Bram, thanks for having me on. Big fan of the show. Appreciate you taking the time here.
Well, appreciate you coming on. I think we'll have a fun conversation because you have a very diverse background, coming from TradFi to digital asset space to fully into Bitcoin, helping build a company. So I'm excited to chat. And yeah, that's something I actually wanted to start with. Like, you worked in the broader digital asset space for like 3+ years. What are the insights and learnings that you got that made you actually decide to move all into Bitcoin?
Yeah, I think from my perspective, and this is a journey as I work in Bitcoin only now, as you mentioned, at a Bitcoin denominated life insurance carrier. So people that I speak with every day are Bitcoiners. And so I think my experience, albeit mine is professionally, others are personally, is a common one among people who are Bitcoiners, in that you enter the space, you get the first exposure to the broader digital asset ecosystem through Bitcoin. Often is the first thing you've heard of, maybe it's the first thing you've read. You read the white paper. You can understand that there is opportunity here for innovation. And then I, like probably other people, then was like, all right, well, what else is out there? This is so exciting and different. And I came from traditional finance before this. So I was like, wanted to go down the rabbit hole more, which I think is intuitive for many people. And so I worked in the broader digital asset ecosystem for Digital Currency Group at a subsidiary of theirs. And that exposure that I had to Bitcoin, but also other protocols, really informed me. And by living it daily in a professional setting, really influenced me to realize that there is Bitcoin and then there is crypto or digital assets. And I don't think that all crypto or digital assets are evil or a scam or bad. I think that there could be real world utility. And I think that is important, but Bitcoin is something completely different. And we can even go farther back, and I'm happy to share my first exposure to Bitcoin and what piqued my interest. But I think that it took me time to really recognize that Bitcoin is money and crypto or digital assets is technology. And so that's a very clear, important distinction. And as kind of the world was happening around me and my career was progressing, and as I started to look for a job after Digital Currency Group, it became that much more important to me to go to a Bitcoin only company because that level of conviction was really built inside me from getting that exposure to the broader ecosystem. And then I finally came to this point where I popped my head back up and realized, Bitcoin, there is Bitcoin, and then there's everything else. And maybe that there's space in the world for other things, but they are not competing with Bitcoin. They're competing amongst themselves for something completely different.
Yeah, awesome. But like, I really wanted to ask this question because, I've often shared here, like I've been in Bitcoin for 10 years. I never really went like out, but I did explore, like, of course, like all the other crypto stuff from like ICOs 2016, 17. I mean, I don't know how many neobanks I funded that, don't really exist. But, because I come like from more like a technology startup background, like I just like an internet geek. Like I love to discover like what are people working on, what's happening, and so when I discovered Bitcoin in the beginning, I thought like, okay, yeah, the internet needs some money, or there needs to be like a money of the internet. So that's how I got in. But then later, all the programmable stuff, etc. It just piques your interest, and so I also went down that part of the rabbit hole. I'd say I think I found Ethereum at like $7 or $17. I don't know, just like early, and just trying that out, and it actually took me like 6 months working on a crypto startup, having an idea about creating like a market research platform for crypto. I thought like, hey, everyone in crypto is a early adopter. Many people are building things in crypto. It's like I see that as like a wild west. It's like the early days internet. People are trying stuff out. Most ideas suck. Like that is all part of it. All okay. But yeah, they need to talk with early adopters, with early users, test their product, etc. So me and my friend wanted to build like a platform for that, where a startup could post like, hey, this is my assignment, go to my beta product, and you get $10 when you fill out a form with feedback or something like that. And so we did that for 6 months, and I talked to like over 200 teams and entrepreneurs and investors, and no one surprised me. Like it was all bad. Everything was bad, literally. Like there was no, like all the use cases, all the ideas were things that I've heard in the previous 10 years in the startup world. But then, it had a token. And there was one conversation where I really realized was a guy I was talking to was building a decentralized social network. And, I could like stuff and repost stuff and then like earn a token or whatever. And then I asked him, but, a social network is like an organic thing. If I post something that's valuable and you like it, that's because it was valuable, not because I have a monetary incentive because I get some sort of token and whatever. And he looked at me like, I don't really get it. And then I was like, okay, but if you add the money part, people start using it. And then how do you know if it's valuable? You just say it's valuable because your token goes up and people trade that. And then I saw their white paper, and actually their financing round was 0.00 something dollar cent for one token. And they just wanted to prop up the token and play like that VC game. And really after that conversation, I was like, okay, crypto is this wild west, and I think it's pretty far behind in the sense of, like, I've been following this for 7 years. There are not that many good use cases for permission blockchains with tokens. I like the kind of like Uniswap stuff, like, okay, that has value and people use it, but that is kind of like an infrastructure thing. I don't see a lot of good applications. Maybe Polymarket I like. That's free information and free money, and that comes together, like that has value.
Yep.
But that really made me realize, like, hey, go back into Bitcoin, because as you said, like Bitcoin is money, is the discovery of absolute scarcity, and crypto is a wild west of startups trying to create a system where tokens get some sort of value, and it's fine, but it's just a totally different thing.
Yeah, I think the irony of what you just said, referring to crypto or the digital asset ecosystem as the Wild West a number of times there, is that so what we're building now today...
In a good way, like people are figuring it out.
Yes.
Like it's necessary.
And what we're building today is a fully Bitcoin-denominated life insurance carrier. And the reason that it's funny that you keep using that phrase is because 200 years ago, life insurance was the Wild West.
Funny.
And it was full of scammers, like, oh yeah, give us money now. When you die, we'll pay your beneficiaries money.
We promise.
Good luck collecting on that. And now it's thought of as this like super stable, boring, old industry that's super safe. And that's what we fundamentally just believe that Bitcoin will become. Is we're building this in this regulatory uncertainty. I think that going forward there will benefit from additional regulatory clarity around Bitcoin and the broader ecosystem. But it is interesting that you keep using that phrase, because our industry that we were building in was the Wild West 200 years ago. We're now bringing Bitcoin into the fold, which is the Wild West now. But we think that it'll just become this boring, safe, stable thing in the future. And so it's that struck a chord with me.
Bitcoin custody is evolving. And while self-custody is important, it has its own risks and trade-offs. OnRamp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your custody setup. OnRamp secures your Bitcoin in a segregated cold storage multi-signature vault, guarded by 3 independent institutional-grade custodians, none of which have unilateral control. Your funds are fully auditable on-chain, cannot be rehypothecated, and can only move or withdrawn at your explicit direction. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. Bitcoin is money, and as the price continues to appreciate, OnRamp helps you seamlessly tap into financial services like trading, inheritance, insurance, loans, IRAs, and more, all without compromising on security or accessibility. Check out onrampbitcoin.com through the link below and schedule a consultation with the OnRamp team to get to know them and learn more about their offering.
Yeah, nice. Well, I think actually a lot of boring things like life insurance, like loans, like mortgages, they are also boring because they are perhaps made obscure on purpose, right? And I really feel that if you use Bitcoin as the base layer of, denominating it, I think that's a good word that you use. For these boring old products actually is the differentiator, right? Because you have to confine yourselves to like the principles and values that emanate from Bitcoin as the base layer, and that's how it's just how you differentiate yourself for also, I think, a new audience in that sense.
Yeah, we actually say this all the time of there's something exciting about taking the world's oldest, most secure products and bringing them to the Bitcoin universe. And so that's really what we've done. We literally, our first product is a life insurance policy from like the 1830s, and we changed the word dollars to Bitcoin. And so it's because it is life insurance, it is subject to the same tax advantages that life insurance is subject to. Governments think that life insurance is a good thing for their civilians to own, so they incentivize them to buy it by giving it these tax advantages or preferred tax treatment. But by denominating it all in Bitcoin, so Bitcoin really is our functional currency, you get the tax benefits of the financial product, plus you get the strength or the relative like hardness of Bitcoin on top of it. So you get these tax advantages plus directional Bitcoin exposure that, because it's in life insurance, grows tax-free as well. So, we offer ways for people to save for the long term with their Bitcoin tax efficiently. They can borrow against their policy tax-free, so they can sell Bitcoin in the future without owing capital gains taxes on its appreciation. And then when they pass away, it's just a way to pass on more Bitcoin to your heirs, and to do so, stress-free, not worried about, can my family, find my hardware wallet? Do they have my seed phrase? Do they understand multi-sig and things like that? So people seem to be excited about the tax advantages. It is something built by Bitcoiners for Bitcoiners, and it's for people who want to hold Bitcoin for the long term. And we can talk about why holding Bitcoin for the long term is a good thing relative to dollars or something else.
Yeah, we'll get there. So as you also have, like, I've spent part of my career in like TradFi, and I wanted to ask you, like, you're now deep down the Bitcoin rabbit hole. How do you look back at your previous career in TradFi?
It's a funny question. I actually think that I got into Bitcoin hypocritically. So I worked out of school. I worked at a big multifamily office managing money for ultra high net worth individuals and family offices. And so in 2017, during the bull run, we more and more were getting questions from our clients around, what is this Bitcoin thing? Does it belong in my portfolio? And our house view was that Bitcoin was not an investable asset. And so the information that we were being fed from our research team was basically all the reasons why we were not viewing Bitcoin as an investable asset for our clients and in their investment portfolios. Now, to be able to have smart conversations with my clients, I then started, actually digging in on Bitcoin and understanding it so this is 2017. And so my job was to share the house view, which was not an investable asset, but then I personally was like getting into it. So I think that maybe I was a little bit hypocritical back then. And it wasn't really until 2020 and the monetary or the quantitative easing or monetary policy that followed COVID, where like it really clicked in my brain that Bitcoin was just something different. It is a money that gives you the option to exit the fiat money system. But yeah, so looking back on my TradFi experience, we took a very institutional approach to investing. I think that I learned a lot of valuable lessons, but ultimately, when you think about the dollar losing 20% of its purchasing power the last 5 years, so much of what we were doing was structuring portfolios that were meant to just like try to match inflation and debasement.
Yeah.
And trying to maintain purchasing power intergenerationally as we're dealing with these ultra high net worth or family office clients who are thinking multi-generationally. It's not necessarily about like maximizing returns. It's like, how do we preserve, we're wealthy, how do we preserve this wealth and not let, the two greatest eroders of capital are taxes and inflation. And so that's why like I'm so excited to be doing what I'm doing now, because it's a tax efficient way to hold Bitcoin, which is a protection against that very inflation that is just eroding people's portfolios. So
yeah.
It's interesting, and it's informed my way of thinking about Bitcoin as a money as opposed to just an investment or asset itself as well.
Yeah, I love that you added that, because it's also, you might think that, people that are rich, that have a certain wealth, task one is, I don't want to have less. And then task two is, I want to have like make the money work, right? But yeah, I think it's interesting that you were in a role where, that was then your job, but that not even everyone understands where like the issues come from that might make you lose some of your wealth, right? And I have a friend, Richard Byworth. He manages a fund in Switzerland, and he says like a lot of people in traditional finance have no clue about finance, and I think that's funny. And that is really it, right? Like, I'm not saying nobody knows about finance, but more like you count like units, you count percentages, you count nominal values, whatever, but you never question, what am I actually counting? What is the money? Like, what is the influence on these units that I'm counting here, right? And I've shared the story many times on the podcast, but it took me working at a bank, telling a colleague telling me like the money in the bank is not yours, and explaining that to me, for me to realize I have no clue about money, and I'm walking around in a bank, Yeah. So how do just normal individuals that don't work at a bank, that just do whatever they are good at and trying to build their life, how should they know what money is, right? And yeah, once you realize, and I think that's like the little red pill you maybe take before your orange pill, is like, why have I never been taught about what money is? What I trade my finite time and energy for. And I think that has been a trigger for a lot of people when they're like, okay, well, maybe I should look into this. And then you look into that, and then you learn all these things that no one has ever told you, basically.
Yeah, and I think that's just the importance of what you're doing, Bram, and many others in our space. There's just this hurdle of education. So that's why I have such a deep appreciation for what you do, is getting out there and educating people on this. And I think what really struck me was, you think about like, what does it mean to be a currency? And people try to tell you that it needs to be a medium of exchange, a unit of account, and a store of value. Well, and actually Michael Saylor's, I've heard him say this before too, is there are lots of medium exchanges, across the world. Many countries have their own fiat currency that's used as a medium of exchange. Unit of account, there's only like a handful, because so many of those currencies are backed by the dollar that like really, if you like dig deeper, things just come back to the dollar. And then store of value, I think we've been led to believe, because we work for dollars and we spend dollars, and you think that dollars are a good thing. You hear about people in Argentina who are trying to get out of the Argentine peso to go to the dollar. When I started managing money for really wealthy people, and like I said, we took a very institutional approach to investing. So it was very asset allocation driven. So every asset or strategy had a target allocation. Our target allocation for cash, for dollars, for every single one of our clients was 1%. 1%.
Well, that makes it clear it's a bad store of value.
Right, exactly. So if that trifecta is the criteria...
Sorry. Which translates into, for people to learn, saving is dead, right?
Yes,
so
exactly.
That's what you've been told, is like you should save and blah, blah, but saving is dead.
If that trifecta of characteristics is the criteria to be currency, store of value, unit of count, and medium of exchange, there are no, other than Bitcoin, currencies that exist, because it is just simply not a store of value. For the ultra wealthy and the ultra wealthy, who were my clients, they had a 1% target to cash. And as I've really kind of grown in my view of Bitcoin being money and not just an asset or an investment, is as you take that institutional asset allocation approach to portfolio management, that to me now means that Bitcoin isn't just its own singular line item. We were managing money for people with hundreds of millions or billions of dollars, and those were bucketed as cash, which is 1%, but then it'd be fixed income and private credit and passive equities and active equities and private equity, venture capital, real estate, things like that. And I think the next step, people are like, who think they're really crypto or Bitcoin savvy, they then add a line item, which is Bitcoin. But my view that has developed over time is that Bitcoin is not its own line item. If it is a currency, it exists within each one of those line items. So if you're going to have exposure to fixed income and private credit, passive equity, active equity, private equity, there should be an allocation in each of those buckets to Bitcoin. Bitcoin fixed income, Bitcoin private credit, Bitcoin just long directional exposure, Bitcoin active exposure. Invest in the picks and shovels of the Bitcoin ecosystem via private equity or venture capital. That should be the approach. And that was like the biggest mind shift for me, from going from Bitcoin as an asset to Bitcoin as a money.
Yeah, interesting. Because I think there's different angles that you can like look at this, right? Because you can think about, the absolute supply. And anything else that you can hold as a store of value, you can make more of, or you might be like, oh, I have like this beach house somewhere, or I have like an expensive diamond or a ruby or whatever. But that's not instantly liquid, for example, right? So you have like, you can be like, oh, well, this is more scarce because there's only one of one, but then there's also only maybe like 15 people in the world that would and could buy it, right? So that's, I think, how you go down the ladder of kind of like the characteristics. And the same goes for like, I've had this crazy discussion with someone about stocks, and they're like, no, stocks are better or whatever. And I said, if push comes to shove and I need to leave now, I just have Bitcoin in my head. And what do you have? Like an app that says like, oh, you own X amount of stock or something, and then you end up somewhere and you say like, no, I'm really rich. Look at look at the thingies here, So that doesn't work. You never really own stocks. The stocks are not your property, like stuff like that. And so I think it's really cool that you also turned, I think, the experience of TradFi into like understanding Bitcoin from these multiple angles, because I have to say, if I look on Twitter, like a lot of people with a finance and economics background are super wrong about Bitcoin. They are stuck in their paradigm of never even thinking about what the actual money is, and they stay stuck in like models and just conceptualisms and stuff. But yeah, if you drill like one level down, I think it's very weak. like the arguments on like inflation is necessary and stuff like that. So yeah, I think it's really cool to hear about that experience. Like, do you think TradFi will ever catch up with Bitcoin, or do you see like companies like Meanwhile or OnRamp, or just any other Bitcoin company, new lending solutions coming about, etc. Will that just become like the new, let's call it, financial industry? Or do you think TradFi can actually not only catch up, but also, transform themselves, I'd say, to adhere to the principles and
Yeah,
values?
no, I would go with the latter there. It may be a case of like, if you can't beat them, join them. But I think that we're seeing this paradigm shift. And actually, shout out to your colleagues at OnRamp. For those that are working the venture arm, there's been this paradigm shift of like Bitcoin as the new benchmark. And actually, I saw like Anthony Pompliano was talking about this, or the S&P 500 is no longer the benchmark for young people. It's like, the question is, can I beat Bitcoin? If I can't, I'm going to own Bitcoin. And I think that we're seeing these funds pop up around the world, and the folks at Early Riders, many of whom you work with, recognize this. And it's just this recognition, and we've already established that dollars are a bad thing just to own outright. So it's this recognition that if you have a duty, a fiduciary duty, or a duty to investors, you are doing them a disservice by holding dollars. So if you're an investment manager, if you run a fund, if you run a company, there's going to come a time when you will be held accountable by your investors and your capital base to make sure that the money is working for them. And dollars clearly dollars are not doing that. So if it's funds that, until they deploy capital, hold all the capital in Bitcoin, and then they only deploy capital in opportunities that they think will outperform Bitcoin, that's like what we've built, right? Is this fully Bitcoin denominated life insurance carrier. We don't allow it to touch dollars. There are no stable coins or anything else. It is exclusively Bitcoin. Our balance sheet is exclusively Bitcoin. We think we're the first company in the world. We actually state our audited financials in terms of Bitcoin. We do all of like the insurance math that insurance companies do, like solvency calculations and reserving. It's done in terms of Bitcoin. All of our regulatory filings are done in Bitcoin. And it's because we want full directional 100% long exposure to Bitcoin. So do our customers, so do our investors. It allows us to vacuum out any relative volatility to the dollar or any other currency. But that's what people sign up for, is they want tax efficient long-term exposure to Bitcoin with the option for liquidity during their lifetime. And you only can do it if you denominate everything in Bitcoin. So for us, like when I say I've come to this full circle moment where Bitcoin is a currency, not an asset, that's why I was so excited to join the company. Meanwhile, that I work for now, is because it was one of the first companies that like really went all in on that approach, that Bitcoin is a currency. We use it as our functional currency. We don't even call it the price of Bitcoin. We call it the exchange rate of Bitcoin.
Exactly. Yeah. That's a good one. I use that all the time because it is an exchange rate. And it's also, I like what you're saying is that when you start from the ground up, you can actually denominate anything in Bitcoin, right? If you have to transform your fiat money or fiat minded financial company into thinking in Bitcoin, like that's going to be very hard, I think. And I think you guys are a nice example of just building in the new paradigm, and there's probably a slowish or slower start because the pool of people that understand Bitcoin is just small compared to the general customer segment of a traditional life insurance company, right? But yeah, that will grow over time because I agree there will be. I mean, this is called Bitcoin for millennials, but we have younger generations that will grow up in a world where Bitcoin is just there, and it is different, and it is more transparent and more liquid, and all these things, trustless. All these characteristics. And so over time, as with any new innovation, there will just be more people that are like, hey, well, Bitcoin is an option. And if TradFi companies or fiat denominated companies, let's call it like that, cannot differentiate themselves, then well, in my mind, Bitcoin has already won, but it just takes some time,
Yeah.
If you have your Bitcoin in self-custody, where are you keeping your Bitcoin seed words? For me, there's only one way, and it's backing up my seed phrase with stamp seed. It's a single durable plate without any parts or materials. Stamp your words into solid titanium, which is fire-resistant, water-resistant, and built to last. Unlike etching or engraving, stamp seed's patented tools help you to deeply stamp every letter for permanent readability, making it easy for you to protect your generational wealth. Don't risk losing your seed phrase on paper. Get a stamp seed plate for unmatched protection. You can use code BRAM, that's BRAM, for 15% off at stampseed.com.
Yeah, and I actually think back to your question of will TradFi catch up or how what will that dynamic be? I don't claim to be a MicroStrategy expert, but I actually think what MicroStrategy and Michael Saylor are doing is great proof that the world has appetite for this. So if you just high level look at what Michael Saylor and MicroStrategy is doing, is they're taking Bitcoin exposure, they're putting it into financial productization of Bitcoin, or they're putting it into financial products and vehicles. One of which is MicroStrategy convertible debt, and there were big headlines that in Q3 or Q4 of this past year, I forget which one, MicroStrategy made this big announcement that they were going to raise money to buy more Bitcoin via issuing $21 billion of equity and issuing $21 billion of convertible debt. And they've been blowing through that. It was like a 3 or 5 year plan. I forget which one, but they've been blowing through that. And it took like 2 months for them to eat through most of those numbers. And if you look at what's happening in one of the November issuances of the convertible debt, the largest purchaser of those bonds was Allianz, the second largest insurance company in Europe, the largest insurance company in Germany. And why is that the case? Because insurance companies, pensions, international funds, these are the biggest allocators of capital out there, many of which make money and run their businesses by leveraging their balance sheet. So a traditional insurance company would never buy Bitcoin because they can't get any leverage on it. But by buying an unrated bond, they now get leverage on that Bitcoin proxy exposure. And so I think we're just seeing this like continued growth of appetite for the biggest asset allocators in the world for Bitcoin or Bitcoin-like exposure. And then the last thing that I'd touch on as well is almost a year ago now, we saw the launch of the Bitcoin ETFs. Clearly, it was the most successful launch of any ETF in the history of the financial product. And what we're seeing is, if you take BlackRock as an example, they have a macro fixed income fund, which is called the BlackRock Strategic Income Opportunities Fund. It's a $40 billion fund. Their mandate isn't to make absolute returns. Their mandate is to beat their benchmark on an absolute return basis. So if their benchmark is the Barclays Ag or some other taxable fixed income index, they just need to beat that. And in a world today where knowledge and information is so readily available, how do you get an edge? Well, if you're managing a macro fund, put a sleeve of it into Bitcoin, because it's diversified and it's going to give you better returns. And I think it kind of goes back to what we're talking about of like early riders and these other funds that are doing this. So today, this fixed income opportunities fund from BlackRock owns $100 million of their own ETF.
Yeah.
And that equates to 25 basis points of the entire fund. As their returns get better and they beat their benchmark by more and more, by adding more Bitcoin, that 25 basis points of allocation is going to go to 50 basis points, to 1%, to 2%, to 3%. So I think we're just at the very tip of the spear of this institutional wave of inflows.
Yeah, what I also find interesting, you mentioned insurance companies, for example. Like there are a lot of TradFi companies that actually have a very long-term business model. Also, they have to plan forward towards the future, right? Like also like pension funds. And a few episodes back, I had CJ Konstantinos on, and we talked about this, and he had a really good insight on that. Like, how do you measure your I also worked in an insurer, by the way. Like, how do you manage the pool of money that needs to be you need to manage it, you need to allocate it, you need to like plan towards the future, and you actually need to be able to mitigate also the inflation in like 6 years if claims come in for whatever insurance, basically. So that is becoming increasingly hard for these types of companies, same as with pension funds, right? Like, okay, I need to manage money now in order to have X amount of euro or dollar units in 20 years when this cohort of my clients retire, basically. Yeah, how are you going to do that if the entire inflation is unpredictable? Because these people know, at least I hope so, that they should not follow 2% or even 4%. Realistically, it's probably like 9%.
Right.
And no one can look 20 years in the future, especially with like the debasement, the accelerated debasement. So they are running into this problem already today, because just the management of the pool of capital is becoming increasingly hard, because the debasement is just continuing. And actually today I saw a tweet or like a post about something Janet Yellen said, like, oh yeah, the printing of the money during COVID might have had a little to do with inflation. Well, in 20 years, you have no clue what kind of like world stuff is gonna happen, right? That asks for more printing, and the debt bubble is clear, and all these things. And so, my point is, these types of TradFi companies that are essential, I think, in a healthy society, as in like insurance and pension, they are already running into this problem of just being unable to have a long-term outlook.
Yeah, and I think that's really what we spend our time talking about is when you run a life insurance carrier, you plan for the next not year or 2 years, you plan for the next 50, 100, 150 years, right? We've sold life insurance policies to people that will outlive every person that works at our company. So we have to think in the very long term. And by doing everything in Bitcoin, we also try to help train people to take that same low time preference with respect to how they view Bitcoin relative to dollars or something else. So we don't ask the question, what do you think Bitcoin will be worth next month or next year or 5 years from now? It's, what do you think Bitcoin will be worth 50 years from now, 100 years from now? And what is, I think, what really excites us is that because life insurance companies have this long-term view, they play a really unique role in the broader economy. And that is one of being a permanent capital provider. So like, there's a reason that every high rise in Manhattan is owned by a life insurance company, because it's like a long-term hard asset. And as a Bitcoin denominated life insurance company, we are viewing it as, how do we help fund the most consequential businesses that are going to help build out the Bitcoin economy? And so that's like a really fun part of our job, is thinking about, what does the Bitcoin economy look like, not tomorrow, what does it look like 5 years from now, 10 years from now, 50 years from now?
Yeah.
And how do we help fund those companies that are going to be the most consequential companies of the Bitcoin economy, and I think by extension of that, of the world, in the next few decades?
Yeah, I love that. I have a friend that talks about this part a lot. He says, like, not many people understand yet that the future of Bitcoin will be built by the Bitcoiners, right?
Yeah.
And I think I love that, because that goes to the core of like alignment of incentives with Bitcoin. And I recently talked to Jeff Booth, who I call it a mutually beneficial game, and he said it's a competitive cooperativeness, basically. So you work together, but you are a competitive. Well, you are a cooperative competitiveness. He said other way around. He said like you are competitors because you're competing for, just like in a healthy just market for like just building the best product, having the best service, whatever. But because you're doing it on Bitcoin, anything that anyone does on Bitcoin benefits Bitcoin. And I love that idea because that is actually a totally different system of incentives when you compare it to the fiat money system. And so I love that you touch upon that. And that is the long game. Like we can talk about that conceptually, but that we have to teach our children basically to do that in 50 years. You know what I mean? So, but I think it will come naturally because once you understand the value of Bitcoin in the world, you want to contribute to it and you want to make sure that it permeates and lives on into the future with being decentralized and secure, etc. So I think that will become like a natural thing for people to do.
Yeah, and what I like about what you just said too is this concept that anything that helps push the space forward is a win-win for us, for our competitors, for our partners. We all want to push the space forward. So while I spend most of my days helping prospective policyholders of Bitcoin life insurance think through how to plan for their lives and their families' futures, there's also kind of like these side quests that we go off on just to try to help push the Bitcoin space forward. So an example of that would be like I spend time speaking with people at S&P and Fitch and Moody's and other rating agencies, because what would be great for us is like development of debt capital markets in the Bitcoin economy. There is no yield curve. Like nobody knows what terms of loans look like. There is no rating on a loan. We think that if you're a company that works in Bitcoin, that generates Bitcoin, then you should denominate your debt in Bitcoin. This is why so many miners went bankrupt in 2022, is they were borrowing dollars to buy equipment to mine Bitcoin. But then as the price of Bitcoin dropped, the purchasing power of their cash flows or their revenue dropped, and so they couldn't service the debt. Bitcoin miners should denominate their debt in Bitcoin because that's what they're cash flowing, or that's what they're generating, or that's what their revenue is. But there is no like market for that. Nobody knows. Like we want. I talked to CoinDesk indices and other folks like this, where it's like, let's establish old school LIBOR for Bitcoin, where like you get on the phone at the end of every business day and like collect the overnight rate from the 30 largest lenders and get a sense for what like the going rate is, And I think that if you believe that Bitcoin will be more than just digital gold, if you believe it will be digital money, there will be a global decentralized economy denominated in Bitcoin, then there does need to be like velocity of the currency. You can't have an economy that has no velocity of the currency. So there needs to be use cases, there needs to be utility, there need to be financial products, there needs to be capital markets. And so that's kind of the fringe things that we're working on, is like, obviously it helps us if we can get Bitcoin denominated debt rated by a rating agency. But I also think that it just pushes the whole ecosystem forward too.
Yeah. Previously, we mentioned, you working as like a wealth manager for family office and high net worth or ultra high net worth individuals. Do you think these people get Bitcoin yet? Like, as you said, like you were following the more strategic approach that eventually made you get into Bitcoin. But of course, just because of the environment, you initially dismiss it or just don't see it. People that have that much money, as you mentioned before, like they want to protect the wealth before they grow it, right? But if you turn on the TV, it's like, okay, Bitcoin is speculative, or it goes down again, etc. I'm of the opinion, and I think you agree, that Bitcoin is the best way to secure your family's future wealth. So that's a big dichotomy between what the TV says and once you study it, you can see what are like where are these people at, or this cohort of people, and what are like the most common misconceptions that you've heard or now think are not smart to think, basically.
Yeah, it is so early, Bram. I think for most people out there, and even just within our company, if we talk about who's buying Bitcoin denominated life insurance, there's kind of like two profiles of people. One is Bitcoin or crypto native people. Most of their wealth is in Bitcoin or the broader digital asset ecosystem. That's one group. The other group is just like ultra wealthy people whose wealth is in more traditional assets, and they maybe like just happened to buy a couple Bitcoin because like junior or like their grandkid told them to buy it, but they don't understand it. And frankly, like they're buying our life insurance policy because it's a way of taking this asset that they don't understand and putting it into a financial vehicle that they do understand. And probably more importantly, that they're like advisors, their accountant understands too. But there's not like this deep understanding of Bitcoin. And I'll just give you like my personal experience of people in my life. I work in this space. I've worked in this space for a while now. And like, there's just this dramatic misunderstanding. And the reason that I don't talk about it more is because I'll probably get like kicked out of the dinner table if I keep bringing up Bitcoin at like family Thanksgiving. But there's just like this knowledge gap that, again, I think is just proof that what you're doing is really important, and spreading the education of what Bitcoin is, what's out there. But I think it starts with understanding money. And when you're an ultra high net worth person, or you're the matriarch or patriarch of a family office, and you've been working for dollars, and your family before you was working for dollars, there's almost like this numbness to what money actually is. And until you like confront that question, I think it's really hard to understand Bitcoin. And I just don't think 99% of people out there, if you just look on, quantitatively, there's $2 trillion worth of Bitcoin out there, market cap Bitcoin, roughly $2 trillion. If like the global assets are, I don't know, 900 trillion.
Yeah, it's nothing. Yeah.
It's nothing, right? And so I think that it's proof that more education is needed, and we need more people like you doing what you're doing.
So of course, the if you put on like your wealth management hat for a second, and we're thinking you are also a millennial, and of course the idea for this podcast came from, I truly believe that there is no pension for us. Like the traditional pension is not there. You could be working a fiat job right now and you could be paying the pension, but I don't know. Like, I'm convinced that it's not there. And I think you should realize that. Just do your own research and then realize that, and then do your own research and figure out what you would use to actually, try to create that certainty towards the future, or at least lower the uncertainty towards the future that everyone has, right? How do you look at like using Bitcoin as like retirement planning or like long-term wealth strategy? I don't know. I wrote down a couple of words, but like, how do you think people can integrate Bitcoin to actually, these are my words, but like to create time and space to actually build stuff and explore, and instead of just being a consumer or feeling like you're on the hamster wheel or in the rat race or whatever, what you just mentioned, like people don't have time to think about this stuff. Like, what is money? Like, what are you talking about? So I feel a lot of people are in that. That's because of the money, but you still need to plan towards the future, which gives you more stress if you use fiat money. So, well, you know what I'm talking about. But yeah, I just wonder, like, what are your thoughts on that? And last thing to add, like, I wanted to focus on millennials because it's my generation, but also we are going to inherit the biggest wealth transfer in the world, basically. But also we are all in kind of these life phases where big things happen, right? Like starting children maybe, or moving, or having a big job, or, just continuing your career, or maybe starting something new and stuff like that. So a lot is happening in, late 20s to early 30s. And Yeah, that was a big introduction to the question, but I just wonder, like, how do you look at that, or how do you talk with your friends about that? Like, just from like this wealth management or growing your wealth perspective.
Yeah, it's a great question, and it's something that I think we're all confronted with. The way that I like to think about it is what real estate was to the boomers is kind of the opportunity that Bitcoin is to millennials. The average home in the United States is something like $450,000 today. You hear all the time about people in older generations who like bought their first house for $75,000 and it's now worth, many hundreds of thousands or $1 million or something like that. It was like, what a cheat code, what a great way. And this all goes back to this feeling that you can't just hold dollars. You have to buy something that is a store of value, because dollars are not a store of value. And I think the world woke up to the fact that real estate could be viewed that way. There's a reason that Blackstone is the largest owner of single family homes in the United States. They're a private equity company. They're out there making money, and there are these politicians and people that want to blame Blackstone, and they want to blame the grocery store for jacking up the price on the carton of eggs. And then they turn around and they print 40% of all the dollars that have ever existed in the last 5 years. It's this crazy concept. I think the beauty of the beauty of the opportunity that we have as millennials going forward is that we don't have to take all of our life savings and put it into a house that we hope appreciates in value. I buy Bitcoin every day by choosing not to go to Starbucks and get coffee. Mm-hmm. It's not, I don't need to take this one big swing on this one financial asset that costs me my life savings. I just need to carve out a little bit every day, every paycheck, every month, and continue to just dollar cost average it. And I think that's just the best thing that people can do. And the challenge is that when you turn on the TV, to your point, Bram, and CNBC is talking about how volatile Bitcoin is and it's dangerous for your savings. They often fail to zoom out and show you that it's the best returning asset, no matter what starting point you choose. If you pick a 4 or longer year period, and it's hard for people today in the world to take that type of long-term investment horizon because they're living paycheck to paycheck. It's hard to think what is
Which
this?
Which is the signal also, right? That yes. is the signal.
Of course. And so they're not thinking, what can this be worth 20 years from now? They're like, how do I pay my mortgage or my rent? How do I buy groceries or whatever else? So what I like about the opportunity here, and I already said this, but just to round out the thought, is that you don't have to take your life savings to buy a house that you hope appreciates. You can just do the little thing every day to save a couple extra dollars and put it into this asset that I think over time will continue to be the most performant asset that exists and the best store of value for that reason.
Yeah, I agree. I think it's also, you said for the boomers, it's real estate. I think for Gen X, it's the S&P 500. And I had Keith Laska on lots of episodes back, and he said, Bitcoin is the S&P 500 for millennials. And I felt I love that, man. That is really it. But also that combined with just what happened in our youth as being millennials, right? Just going from a cassette tape to a CD to a mini disc to MP3 to streaming, and all the same as with VHS. And we have seen and lived through many different technological advancements, also with the phones and messaging and media and streaming, all these things. And so I also feel we know how this works.
Yeah.
We know how this works. This is happening, and but it's also really hard to realize because money is probably the biggest thing that could be innovated upon. And combining that with what we talked about in the beginning, right? The fact that you were never taught about money should also give you some sort of signal. I think as to how big this battle is on one side, but also just realizing that you're living through a change that maybe occurs one every like 300 years or something, so the fact that you're like living through that is also just a really hard thing, I think, to one, understand, but two, just internalize, basically, because I think it can really distract you or let your ego talk and be like, yeah, well, sure, you're thinking this, it's just a distracting thing. But like you said, like once you have this conviction and you're not distracted, and conviction, by the way, through study, not because some random person told you like, oh, this is a good thing to invest in. No, it's saving towards the future, and the exchange rate is going up of this new money, right? So a few years ago, you needed $3,000 units to buy one Bitcoin unit. Now you need 90 something thousand dollar units to buy $1 unit. And so if you think Bitcoin is money and you see that change and you think about that in the exchange rate concept, think about which money is stronger, right? That's, I don't know. It's sometimes so funny.
You don't see any Americans exchanging their dollars for Argentine pesos or Turkish lira, and it's just the same.
It's the same thing. It's the same thing. But sometimes I hear myself talk and I think like it's so simple, but it's so hard to understand. It's not easy, So, I mean, yeah, I'm happy to have conversations like this to hopefully, create touch points that people are like, oh yeah, that's what Danny said. Damn, I need to look into that, like that. And that's just eventually the entire goal, man. Like and I love these conversations. It also helps me kind of like sharpen the thoughts and think about like, okay, how can we like break it down and try to simplify it? Because you can also never really orange pill someone else, right? So you have to like feed like little crumbs and hopefully people are triggered enough or curious enough or however you want to call it, right, to just go in there, because nobody wants to be on the hamster wheel. Nobody wants to live paycheck to paycheck. Nobody wants to be disillusioned with the story that their grandparents told, and now you're like, but I'm doing the same thing, but I'm not having the same thing. And then all the boomers saying like, oh, the millennials should not complain and stuff like that, right? So nobody wants to feel like that. But my general feeling is that when I read about this stuff or hear people say that, I really experience that I don't have that. And I know it's because I have Bitcoin. And how's that for you? Do you have a similar experience?
Well, let me just take it a little bit in a different direction, because what you said struck a chord here is that it is only going to continue to get more difficult as people live longer than they think they will. The smartest people that I know
really
in the world
yes.
are obsessed with three things. They're obsessed with Bitcoin or digital assets. They're obsessed with AI. They're obsessed with longevity. And I recently heard Peter Diamandis say that there's going to come an inflection point where science is adding more years onto our lives than aging is taking off of them. So what happens when and that's going to happen in our lives, probably. So what happens when you live 20 or 30 or 50 years longer than you thought you would? You don't want dollars.
Hell
right?
No.
So
this is an amazing point.
So when you live longer than you think you will, you want hard money, and you want something different.
You need it.
Yes, you need it, because you're going to have to. And to your point, there isn't going to be Social Security or a pension. So you need something else. That's why I'm thrilled to be working at a Bitcoin only financial services company. You similarly are doing the same thing. And I just think that is going to be so important as our generation and the generations younger than us are living longer than we expect to, are working jobs, are trying to save, and we will need some nest egg to live off of. Nobody wants to work until they're 120 years old, I don't think.
No, dude, this is my entire point of this podcast, is that I learn, and if I learn, I'm happy. And then, if we share it on the internet, I hope other people will learn. But you taught me something like this. I 100% agree. 100%. And I love it because when I talked to Jeff Booth, we talked about the AI part, right? So if AI drives, increases productivity and gives us all these productivity gains, which are eventually deflationary, if we price all of these gains in an inflationary fiat money, that will offset all these gains. So we won't even see the proposed gains of AI. And so that is with AI. And this, what you're saying is absolutely true. Like if our children live 30 years longer than the average person now, whoa. Like where does that money come from? How is that paid, or how do they still work if there's also AI robots doing like everything? They're not going to work when they're 50, I think. So where, like, how do they live? How do we price things? All these things. So that, like, these, I always talk, or lately I've been talking about like convergence of AI and Bitcoin, but I think this is added to that as well. Like people just get older in general.
Yeah, and I think I made the statement earlier already, but the two greatest eroders of capital are inflation and taxes. So that's the exact thesis behind what we're building. Is Bitcoin addresses inflation, life insurance addresses taxes, and so it's how do we preserve our capital going forward? That I think is hugely, hugely important, especially as people do live longer.
Yeah. So from your perspective, what do you look at as like big milestones for Bitcoin in, let's say, the coming decade?
Yeah, I think it all really starts with regulatory clarity, and politics aside, this past election, I think, is going to shift a lot of things that were headwinds into tailwinds. So as we gain more clarity from our elected officials and the different agencies that oversee these things, I think we'll see more innovation in the United States here. I live in the United States. I think we'll continue to see more innovation. I think that also, like, having worked in more of an institutional investment firm, it's a non-starter to invest in a sector or an industry that lacks regulatory clarity. So as we continue to get firm details on what the go-forward rules and regulations around the space will be, it will only accelerate institutional inflows. And I feel very, very highly convicted in that. So I think that that's kind of the most immediate milestone. And then, yeah, I think that there becomes this development of Bitcoin being thought of as digital gold buried in the ground that is just purely a savings vehicle or a store of value into what it was intended to be. It's a peer-to-peer digital cash system. And so if it's going to be used as a currency, there need to be more real-world use cases for it. And so I think that as institutional adoption flows into it, it will dampen out some of the go-forward volatility. Who knows if we continue to see this 4-year cycle. But what I do know about institutional investors is they have target allocations to strategies and assets. And so if Bitcoin drops 20% and they're now underweight Bitcoin, they're going to buy Bitcoin, which is going to prop the price back up. If Bitcoin doubles in price and their allocation doubles, they're going to trim. They're going to sell winners and buy losers to maintain their strategic asset allocation. And I think that that's going to materially dampen out the go-forward volatility, which will help the Bitcoin economy develop so people aren't worried about overnight losing 65%.
Yeah. Good answer. That's a good insight. Thank you. Yeah, that's great. I also, the volatility will go down. But I mean, like on the other end, like once you realize why is this growing in percentage in my portfolio, how should I actually weigh it against all the others? I mean, like there are, I don't know if that's yearly. I would guess it's more often than yearly when you like rebalance your portfolio, right? Or at least look at like what should be the actual allocations. I think the idea of perpetual buyers eventually it is pretty logical. I mean, we've spoken about a few different things, but things like bonds, treasuries, and stuff like that will. Well, some people already say like that's not risk-free anymore, right? So there is no risk-free rate, and you have to actually start thinking about, or maybe letting go of these traditional portfolio allocations. And there's many examples of where Bitcoin is thrown in the mix that you outperform any other allocations, basically.
And I think the keys to this conversation, we've already laid out earlier in this conversation, or in this interview, in that we're anticipating the greatest wealth transfer in the history of the world, from boomers to millennials. With that, also, like, as a transition of leadership at asset allocators and capital providers. And we've already talked about too that maybe the S&P 500 is no longer the benchmark. Maybe it's Bitcoin. And so, to your point, Bram, take investment firm A and they have a 2% allocation to Bitcoin. They probably very quickly can ratchet their target allocation from 2% to 4% to 6% to 8% to 20% in short order. And that is going to be sticky long-term capital.
Yeah. And what you also just said, I like to think about that a lot. If you think about long-term, where are we moving towards? 100% what you're saying. Like, we're going to inherit the wealth. Millennials are going to be in places of leadership. They're going to set strategies. They're going to set course, etc. And yeah, in a world where Bitcoin exists and is never going away, you need to understand Bitcoin to a degree to understand why I'm saying it's never going away. But once you understand that it's always going to be there and act as like this mirror or another competitive asset, you have to take it into account when you're deciding on an investment strategy. And yeah, it just takes some time for people that understand Bitcoin to get to these positions where they actually decide. But yeah, once you understand Bitcoin, like that allocation is going to grow. And I think when you think about that, it's I don't want to say it's easy to argue, but there's a very logical explanation as to explaining why interest in Bitcoin will grow, in investment or allocation to Bitcoin will grow, adoption of Bitcoin will grow, basically because older generations die and they just, move on, as with any technological advancement, right? But if you think about that, and parallel to that, just having accelerated debasement of fiat money, necessary debasement of fiat money, or more taxes, more inflation, like you also mentioned before, then yeah, that becomes a really clear path, in my opinion. Like that helps me to set like an idea for the future, and also, use that as part of building my conviction, I think.
Yeah, I totally agree. And I think the last thing too that is probably a whole different conversation that we can have is, as the space develops, as capital markets for the Bitcoin economy develop, and as liquidity becomes more readily available on Bitcoin, why would you sell your Bitcoin if you can borrow against it?
Yeah, exactly. Yeah.
So
100%. Yeah. All right, man. I want to ask you my last question, and I ask everyone the same question, which is, what is a core belief that you will never let go?
That's a great question. I'm going to say treat others well. Treating others well, I think more and more in the world that is run by social media, there's this sense for, or desire for, immediate gratification, and people very easily can turn to, what can you do for me? And so treating others well, it can be as simple as, treating your spouse well, your children well, your family, friends, colleagues, neighbor, complete stranger. But in my relatively short experience on this earth, I think the best and easiest way to live a fulfilling life is to live a life that's in service to others. So treat others well.
Love that, man. Well, thanks for sharing, and thanks a lot for this conversation. I learned some things, so thank you. And
Me too.
yeah, man, wish you best of luck. Thank you.
Thank you, Bram. Appreciate it.
I hope you enjoyed this episode. If you did, you can click here to find more just like it, and click here to find all Bitcoin for Millennials podcast episodes. Also, please like this video if you want to help shine a light on the message of Bitcoin, and subscribe to my channel to stay connected. I hope to see you for our next episode.